The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. And man, wow, what is a big move in the S&Ps now? 1,000 Dow points. It seems regular that, 1,000 S&P points. It seems regular that we're having 40-point range days. If you like the volatility, it's here, folks. But you know what? You gotta pay attention if you're going to trade this, as you know. And, if you get stopped out, you get stopped out. You can't, with, 30, 40-point moves intraday, one way or the other, you can't really let this thing kind of go to the bottom of your chart and say, oh, it can't go any lower, or go to the top of your chart and say it can't go any higher. Are you guys, okay, so you guys are seeing my chart on the S&Ps here. Again, this is the weekly situation. The daily got that inflection point around 45, was it? We're going to review that. But, these weekly inflection points, we talked about that DMZ holding. I got stopped out down below. I don't, these S&Ps, you got to give them some room. But if you're kind of playing around with this on the day trading side, like I said before, it can just really get away from you. We reached a low 1822 rounded off. This is 1832, 1833. So, I got hit on that one a little bit, but got back in the game when we got back in that DMZ, because my whole theory, which can be wrong sometimes, as we know, is to kind of get back above that DMZ around that daily and weekly inflection point and just, try to breathe a little bit back into the balanced area that seems to be happening. In a wide profile, remember, this is a relatively wide profile. You've got to pay attention to these POCs. These are kind of the top of the mountain, the top of the hill. This is the mode of the profile. 1875, remember that? So we've reached a high of 1872. That's the big, strong weekly, daily situations. We have broken some profiles up here, so we might have a little bit of a range situation. And I hate to even predict a range on this, but 1859.40 is going to be support on the S&Ps now, and you might have a little bit of a lid around 1875. So you got about a 16-point range there, and all things considered, that's about a normal day's range. But I don't know if we're in normal times right now, so make sure you use your stops. That's the situation in the S&Ps. What's it's predicated on? God knows what it's predicated on, but we're going to take a look at the bonds and the notes. We talked about this, maybe having a relaxing moment here at minimum, getting below 131, 13, 14, and being able to kind of use that as a lever on the short side, giving yourself a little bit of room. Talked about the downside targets on this one, 130, 15, 16. I still believe in that. I still believe that, the 240s regulate the trade very well. Want to go into gold really quick. I did a kind of a pre-market video on this. I do those every morning now, by the way, and you got to get prepared for those, because I hope TFNN will start posting them again. They're holding me hostage right now. They're not posting them. I'm just joking. Tommy's going to post them soon, I hope. Just insightful, in my opinion, little kind of pre-market blurbs. I did one on gold this morning, and the whole premise of the video was, we talked with Tom on Tom's show the other day about that 1200 kind of psychological area, and we kind of, wanted to at least see some signs. We got those signs already. We had, some 240 profiles. If you'll see the top of that profile is 1201. That kind of matched up with that 1200 psychological situation. I'm going to go into gold in general and just pull up the chart and show you New profile attempting to appear, started flashing today, that yellow peel back. And remember, if I go into the scanner, which is what I did the video on this morning, this is a sign still in that uptrend with that arrow up on the 75. Got a lot of information to pay attention to here, but, started breaking down the 60s. I don't pay attention to the 60s on big moves like this and trying to gauge, is it time to let it breathe, or is it time to sit on the sidelines for a while? I don't really use that time frame that much, but again, for day traders, it's pretty powerful. This is what the sell structure is right now. And right now, what does this all mean? It means we're going to have some new supply probably happen here on gold. You got the magical 1200 psychological hold number sitting here, and the 240s kind of outputted yesterday, big wide range that could be entirely explored. Remember that. I mean, this is a pretty wide profile when it comes to a 240. 1175 into 1201. I mean, give me a break. That's pretty wide for a 240 profile. So again, this could continue to trail down that, and this means that you got kind of a turn the rinse the same way support situation on gold. I know we've got that new profile attempt to appear on the daily, but those inflection points are going to be very powerful. But you've also got right now some support areas around 1175.60. Okay, always talking. Saliva pulls in the right side of my mouth. Don't know why. Here we go. So let's see what else we're going to look at immediately this morning. Shanghai and all that kind of jazz is still closed. Chinese New Year. That's why people on the in Asia are giving me the excuse. The money's on the way. It's because the bank's closed. That's a good one. I'm gonna have to use that. Anyway, so we're not going to look at the Shanghai. Obviously, it's the same print. What we're going to do is we're going to go in the scanner, and I want to look at one specific powerful thing. I'm going to go into my Forex section real quick, and we're going to look at the Canadian dollar. And as you can see, kind of a mixed bag there. We're going to pull up our chart. This is our daily. This is our weekly. We kind of went down and we talked a lot about that 137.59 area that was hit last week. As you can see, we kind of used it to bounce off of. Let me kind of blow this up here. Close back in the balance area. So right now we're coming back down into that. But, we're going to talk about crude oil and how this relates to the Canadian dollar. And Larry's done some great analogy work here when it comes to the Canadian dollar and the crude oil trade. And remember, if Larry's anything I say that doesn't work out, Larry gave me the tip. Just always remember that. But as we look at this and we come back from break, we're going to take a look at crude oil, and we're going to try to make some decisions on the Canadian dollar in a relative trade type sense. Isn't it time for break? I see the clock ticking down. I don't hear the music, though. Okay. I guess we're going to keep talking here. Also involved with that crude oil trade, we're going to kind of be looking at the ruble. I'm going to pull that up. Again, this is our daily holding steady, kind of doing the buy support situation. Just checking on our break here. Maybe my machine's not acting right. Here's our weekly, kind of pressing still up against that top of the profile there, but but as we look at the 4 hour and the daily, we're gonna take a look at crude oil real quick. This break is mixing me up. I'm psychologically disturbed now. Here we go. Let's pull up our March contract, and if you remember yesterday, we were, and I hear the music finally. We'll be right back. We're going to hit crude oil, talk about what we talked about yesterday about this flush that may happen, and what do we do now?
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And when the music doesn't start on time, it disturbs me, throws me off. I'm just joking. I'm like a chicken. I mean, they go to sleep like by the clock every night. You can literally go over there and pick them up, and a lot of animals like that. It's weird. Here we go. Crude oil futures. We talked about this yesterday. We talked about this crowding of this profile low down here. And then, we talked about a flush that may happen before we reverse. Now, there's a couple of things going on. We've made lower lows on Navigator as we've made lower lows on price action here, but we're starting to kind of look like we might, this is not guaranteed or anything. And we definitely have an intermediate low here that's happened around January 20th that may also get flushed. We talked about just, you may suffer through these types of things if you just stay long crude oil, and you got to take the stop outs, and then you got to wait a little bit. We talked about the easier way to trade this particular product was more than likely going into the XLE and looking for some strength in some areas, in some stocks that may be kind of saying, hey, I'm involved with crude oil, but I might not be too depressed about it. Here's the situation on the 240s. I'm not really paying attention to that right now. What I'm paying attention to is, are there a lot of people trying to pick this up? Are there any bids in the market? And can I get a close right now above 29.26? This is kind of in no man's land for me. It's actually in a little bit of a scary territory. We said yesterday to watch out for this because it just didn't look. It looked a little sick around this low again. I mean, we caught a good bid off of it the first time. If you've been watching this show, but when we come back down to it, it's not good. So if we spin around down here and consolidate, in my opinion, we're probably going to head lower. I mean, we want to see these things kind of do a flush and reverse. Not exactly happening yet. So again, 29.26 getting above that area is going to be a big number. But as we go into and we were going to talk about crude relative to Forex first, but I'm going to go into the oil sector in just a second. I want to go into another server here if I can and pull up the Canadian dollar on the e-signal charts for a second. Go in here. This is really cool. If you never used a cloud service, this has got way more power than you guys would probably need. But you can actually host a lot of your, you probably already know this, but you can host a lot of your software builds and things that are, I don't know, maybe disturbing your own computer. Just host them in the cloud and then access the cloud remotely. I mean, it's kind of a cool situation. So here's the euro. We're going to talk about that a little bit. The cool thing about the euro is, by the way, after we kind of failed around this 109 and it was time to not play around with this from the short side, the next big inflection point up was this 113.52. And we had a high yesterday. Let me see, was it yesterday? Yeah, high yesterday of 113.38. So it came within like 10 or 15 ticks of that unfair high, and we backed off pretty significantly from that. So, remember, if you're playing around with these inflection points, sometimes you just got to, wait for the next one to try to pick the battles. That's what I do. But as we look at the Canadian dollar, let me find that really quick. And here's the long term. We looked at it on our charts earlier within the scanner. We've kind of bounced off that 137.59 again, but with crude oil looking a little scary, we could have a rally back up into 141.58, but again, this is something that looks like it's starting to have some relative strength. When I say relative strength, the non-devaluation of the currency. Remember, this is kind of an opposite effect. So, crude oil has any bounces. This thing looks like it kind of wants to reverse now and looks like it wants to start doing some technical damage below 137.59. That's the take on that. By the way, as far as the videos goes, on some of the things that I did on the scanner, somebody was mentioning to me that, they don't know where to get them. They don't know where they're posted. I know Tommy sent out an email on how to get to those videos a while back, and I apologize if I didn't talk about that enough. If you haven't gotten a link to go get those within the TFNN environment, please email me, and I'll try to get you that link, because I think I have it. I know I have it, and TFNN has it also. So let's at least get you the access to those videos. And I'm going to be doing more and more. That's kind of the first 15 or 20 that I did. So feel free to, if you didn't get access to those, feel free to toot the horn about it. Let's see what else we have here. I was going to talk about Kramer, but I don't want to disturb anyone. Okay, get out of this server really quick. Let's take a look at the ruble really quick. Again, kind of oil related to some degree. These guys have a lot more problems than the Canadians do. So again, looking a little weaker, and looking like it actually if crude oil does a little bit of a flush here any farther, you've got some support that is kind of sitting at right now on the ruble to head a little bit higher. But again, crude oil making lower lows, these currencies not getting devalued and making higher highs on the charts, which means they're not wanting to get devalued anymore. So a little bit of a relative weakness in the chart here relative to crude oil. So all these things, including, this situation where we've got, the XLE still kind of hanging in there, all kind of lends credence to, is crude oil going to get it back in the 30s and start developing a range up there at bare minimum? We'll talk about that a little more when we come back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And I've got the page that they put up to, I don't know how, I can't copy and paste this for some reason. It's like Windows is not letting me. It's a TFNN conspiracy. They won't let me copy and paste. That is wicked. Anyway, I will try to copy and paste this page that I'm showing right now. And some folks out there that maybe didn't get the email or had it blocked on a spam list, hopefully can get it. Going to continue to do a lot more videos, especially actually pointing the cannon today towards doing some Nadex related ways to use the scanner. So stay tuned. All right. Here we go. So we were talking about crude oil, and I hate to, it's kind of the instrument du jour for me right now because I think there's some great opportunities. And all the things that we just talked about, the Canadian dollar, the ruble looking a little bit stronger than the Canadian dollar as far as charts go, but the XLE stocks not wanting to cooperate with this kind of move down. I'm still relatively bullish on crude oil. It's just like we talked about yesterday. There's no free lunch. A lot of times we kind of got down into this lower area of the crude oil chart, and here it is. And we talked yesterday about they could do a little flush here. There's no free lunch, and just that may be in order. So you got to take your medicine if you're trying to catch some bids off this 29-26 area. But we talked about yesterday, it might be time not to do that yet. And I look around at these relative trades out there: the Canadian dollar, the ruble, the XLE, and I'm gonna go in the XLE right now. And it doesn't seem like there's a big panic going on here anymore. And you can find some really cool opportunities just by looking across the XLE. Even yesterday, when crude oil kind of spit the bit on that unfair low, you still got some really good opportunities here. Some of these oil stocks acted relatively decent yesterday. Let's take a look at this one. Hess Corp, again, we've had some volatility here in this thing, but it's kind of holding up pretty good lately. Not time to back up the truck in it right now, but I'm just looking at some sell structures over to the right. When I look at these, I'm pulling up. I'm going, wow, this thing's making higher lows, and crude oil's kind of looking a lot heavier than some of these individual instruments. We've had, the safer plays were to go really directly into, this type of environment. Just what's still trading above weekly profiles, and nothing's changed on these deals. And the Spectra Energy, a little bit of a pullback. SWN I think's made a 40% move up. You're going to have some kind of backing and filling on situations like that, but these stocks are like, hey, let crude oil get killed. I don't care. Here's Southwestern, pretty decent pullback yesterday, but again, if you're using the 240 to regulate the trade, you still got really, really good support around 855. So again, these are kind of the Teflon coated ones. You've also got ExxonMobil, which has been really ultra cool. We've been talking about this one, and we talked about this based on the higher lows in the ExxonMobil relative to the lower lows in crude oil about this same time, and then having to really be able to base some trades around these weekly unfair lows around 73.29. And as of yesterday, I'm just going to kind of pull this up here. As of yesterday, we got above that 80.5 area. So what is that? That's the 870. 12 or 13% move in ExxonMobil quickly, and this is a stock that takes the world's weight to move it. There's a massive amount of outstanding shares on this particular product. So what's the targets on ExxonMobil? I still think this POC here, with the strength of this product, 79.58, you can use as support, relatively wide profile, and your targets are still 84.29 on this. Doesn't have to happen in one day, but in my opinion, there's some really cool ways to trade crude oil in a way by looking at some of these XLE stocks. There's another one. We could go through the list here. It's an interesting little situation. Let me go here. Actually, let me go here. Let me go there. Let me see if what looks attractive is coming off here. I'm looking at PSX. This is one that you want to stay away from. We could get a violent reaction on the upside, but I'm looking at this weekly, and this thing has really crossed some borders again. And again, using the relative strength trading situation, you've got much better longs out there. I'm just looking at things that are resting on their weekly lows right now. Let's see here. Okay. All right. Any of those picks that don't work out, remember, it is completely Larry's tips and opinions that I base these trades on. So just keep that in mind. Okay. We're back in the dashboard. So we talked about this ETF situation with the XLU, ranking these based on breadth. This is still a very cool situation here. I'm going to pull up the utilities. Still somewhat Teflon coated. Some of these have pulled back into the balanced areas on the dailies, but again, you know, when you look at these and you look at the ETF in general, I'm going to go back to the XLU. I was watching this yesterday, actually. Man, I mean, what a cool situation. I mean, what a great place to hide, and it's been a great place to hide. And look at what's happened with this thing. This is a massive move for the utility sector. It's trading like an internet stock right now, but not a lot of indications. You know, we had a kind of a resting period that we talked about with that new supply situation that would happen after this bar. But, you know, we're crowding up against this. We might have a new breakout actually above 46.83 in this. You know, how do you trade it? You can drill down into some of these internals and find some really cool opportunities. You know, ED, wow, just if you're short this thing, you got to be ready to commit suicide. This is not what you want to see if you're short a stock that's just going straight to the moon in a market that's just all over the place. It's just, yeah, really nice situation to hide in. So going back to the scanner, looking across the board, some of these XLE stocks, just simple opportunities at first glance, just trying to save some time. CMS, we talked about this one. Again, you know, sitting right above, just kind of consolidating right above these unfair highs around 39.78. You got some cool opportunities with this, especially if the market, I mean, I'm kind of a proponent of the stock market, just kind of edging up here. So we'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Where were we here? I was looking at a couple of currency situations that I have to pay attention to. We're looking at the XLE, or excuse me, the XLU. What I want to do is go back to the financials for a second, because we're just trying to get an idea of how to deal with these S&Ps right now. If you're trading S&Ps, let me see if we got any prints pre-market here. Yep, 2072. So, the financials, I think a lofty aspiration right now for the financials would be to kind of get back into 2084. I don't, again, these things, they have some issues, and I don't think any government intervention or anything else is going to build up investor confidence right now. So that being said, we're going to roll back into the S&Ps here, and we've had some volatility this morning. We talked about, support was going to be 1859.40. Looks like we're rattling around above that. We've reached a low of 1859, so we've kind of come down and kissed that thing since we've been talking. And there's the 60-minute. There's that kind of volatility down to that area, top of the box on the 240s. I'm actually a big fan of this continuing to kind of drift a little bit higher. I think, what general kind of trader mentality is, if we kind of, get close and some people are kind of trying to push this thing into eclipsing these recent lows back in the week of late, or January 18th to January 23rd. If that doesn't happen and we start getting even farther away from it, people have to start covering, and people that were trying to press this trade, now are like, oh my God, they're going through the psychological things like, oh, I'm the idiot who had the low print, blah, blah, blah. And in my opinion, a little bit of that's going to cause this thing to continue to drift higher. And I'm not a proponent of getting short too much here. We've had, and I'm looking at this as a little bit of a continuation up higher from kind of some of the reversals that happened yesterday. So I'm going back to my breadth situation. We did cross breadth positive yesterday, after between 1 and 2 o'clock on our short term. That's good news. Still very negative on the weekly and daily, and that'll change a little bit on the opening. But what does that mean? That means that we've got at least some targets up at 1875, 76 today, I think. They're on if you watch the very smart people on CNBC. Yeah, the world's coming to an end because the market's been down 3 days in a row. It's just amazing. This thing can head lower, guys, so put your stops in. I personally think we're going to consolidate around here and head a little bit higher on the short term. Yeah, I'm watching, Paul. I guess that's what you're saying. Wait for a counter trend rally and get short on the SPY. Yeah, I mean, I think we're due a little bit of a pop here, and I think we could squeeze some people a little bit before we kind of reassess things at some higher inflection points, and take a look at the internals and what's jiving and what's not jiving together. I'm totally with you on that, actually. So we're going to hit a couple of grains. We're going to take a look at my favorite, the March soybean trade. So, we talked about this thing heading lower and then using 866 as a lid here. I still think we could ultimately reach down for that 854 general area, and that's what we're looking at on March beans. The silver trade, wow, finally caught a bid here. Considering what gold's doing, this was obviously your targets initially on silver, 1514, 1515. We've obviously reached a little bit higher than that, but if we get a reversal and have a close below there on Friday, it's probably going to be somewhat of a lid for this thing. I'm not exactly super excited about getting long gold or silver. I've actually not been a participant on the long gold trade as Tom has, and but not been short either. So just didn't feel like the odds were really in my favor to look at those from the long side, either one of them. But if you guys have been long them, that's awesome. Okay, we're gonna look at a little stock that, if you remember when FXCM had a real big problem when the currency issue with the Swiss franc and the euro dollar getting kind of unpegged there. If you guys remember that, do you remember FXCM, big currency house? Okay, so here's the chart, and as we look at this, I actually like the way this is acting. All right, there's an unfair low on the weekly around 916. Had some news, come back. Again, the breakout, remember, go back and retest. Look how this has acted. Then just a massive amount of activity. And now we're coming back and retesting an area that, in my opinion, you got a chance to pick a battle here again on the long side. We've just been kind of consolidating. You could look at that as we might have another flush. That's what stops are for. But in my opinion, you got another chance for this stock to do a little bit of a pop. And what's your upside target on this? Guess what? Your upside target's $14.99. You got a decent risk reward scenario on this stock. I've been paying attention to it, so it might be something to put on your radar screen. Again, I like trades like this. Another news event might come out on the positive side to kind of get it going again, and the risk reward's probably about, I would call it 10-1 on this one. So might have a chance to hit a double here. But again, put the stops in. Nothing is a lock. Let's look at Aflac really quick. Not FL, AFL. Here we go. All right. So, we're talking about some financial stocks that may be bucking the trend. I'm not a big fan of financials, as I've stated before, but you've got something here that really came down and found support. It's making higher lows relative to that XLF trade, and got a little bit of a hill to climb here around this 58.21. But how's this thing looking? It's something you probably ought to put on your radar screen, because if we have any type of rising tide lifts all boats and the market starts going north a little bit and the XLF turns around at all, these are the type of instruments that are showing their hand early, and it could be in my opinion, it's already been a buy situation down near those unfair lows, 55.48. It was time to take a little shot there based on what the XLF was doing in general. But you've actually got a breakout situation that you could take advantage of around that 58.84 area. So AFL, keep it on your radar screen. It's not a bad little play here. along with FXCM. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Crude oil's kind of crowding down here, and again, we're getting near these areas where, a lot of times these guys want to just flush some stops here, and it's not like they're not known. But again, I like the non-reaction on a relative scale that's kind of surrounding crude oil and things out there right now. I'm still looking at this as like, let's just let it do what it's going to do. Let somebody else figure out the bottom here after we eclipse this 29.26, and then let's, hopefully we can get some bids in this thing and start, catching a move up, which would seemingly excite the U.S. stock market, actually. And this is already kind of showing some Teflon on it relative to what crude's doing. We've got some, XLE situations that are kind of bucking this also. All these could, at some point, remember, there's a breaking point for the price of crude oil going down, but for a lot of these other instruments. But right now we're trading 54.37 on the XLE. We're still sitting above these, daily unfair lows, And I generally just like the way things are acting surrounding the price of crude oil right now, and it tends to make me think that I'm not the smartest guy in the world, and some of these other folks who are piling into these things and not totally, panicking or know what they're talking or know something. So, again, something to keep in mind when you're looking at crude oil and not thinking it's going to go to hell in a handbasket here. But again, as we look at the price of crude oil from a sheer raw sense and looking at our profiles, I mean, on the long-term basis, there's nothing to hang your hat on yet. And like I said, on the intermediate basis, you shouldn't be trying to pick longs yet. Again, this is kind of a get back above 29 to 26, or let's see if we can have some new information down below. There's kind of a shorter-term contra trade support around 28.03 if you wanted to play around with that. But again, that's kind of a short-term trigger point, if you will. Okay, let's take a look at PEP, PepsiCo. Man, I mean, a really good setup. Let's go back to the scanner for this for a second. Let's type in PEP. And, wow, that's interesting. Dr. Pepper pops up in the same time I type in PEP. So, again, here's kind of like the cell structure. You see some arrows up on the daily, which means we're kind of in an uptrend on the intermediate, but in a balanced area. And we've got a 3 there on the weekly, and it's green. So as we click on this, let's let it populate here. This is our daily. This is our weekly, as we've seen on eSignal. This is our daily, again, within the profile. God damn. Okay, so the question is, and let's go back to PepsiCo. I'm not a big fan of trading or throwing the dice before earnings. I'd love to see this thing I'd love to see the action and then kind of trade the reaction on PepsiCo, but put a gun to my head. It's really been looking good, especially in this market. And some people may know something. It seems like it's compressing against this daily, and we could have a little bit of a breakout here. But again, anything can happen, Captain Bob, before earnings. But put a gun to my head. It looks more longish than shortest, without question. Thanks, guys. Stay tuned for Larry and all the guests on TFNN all day long. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.